I'm originally from Colombia, moved to Brazil in 2013. I always tell the story when I had to go to a banking branch and open a bank account, and it was one of the most painful experiences I ever went through. I had to go to one of these bulletproof branches, a lot of security arms. It took me about an hour to get a simple bank account, get a credit card. And I started looking a lot about that industry and was very surprised about how concentrated it was. 5 banks own 80 to 90% of all the assets, investments, credit, lending in Brazil, in Mexico, and Colombia. And that to me seemed like a really great opportunity for disruption. It seemed almost impossible, frankly, to go against one of those big companies. But we were able to put together a very, very good team, focus a lot on the experience and the customer, and here we are. It's been quite a journey over the past 8 years and still a lot to do ahead.
You've had enormous growth that accelerated during the pandemic. Can you explain what happened and, frankly, whether it's sustainable at this level, if not more?
Sure, yeah. So we were growing very fast up to a pandemic, but people still had some questions about digital banking. I think the concept of saving your money in a digital bank, in a bank without branches, was scary for still a lot of people. They wanted still to go to a banking branch, talk to a banking manager. The pandemic, in a way, forced that behavior change among the most of the population. Because branches were closed, and so it wasn't even an option. And people start trying us, and they realized that it was a better option. We charge no fees, better customer experience, all in your smartphone. And suddenly we start seeing people in their 60s, in their 70s, in their 80s, people across the entire Brazil, all different municipalities in the north, in the south, using us. And when they started to use the product, they never went back. It was clearly a superior product. They liked our experience, and that has really accelerated kind of the growth. We now see that growth accelerating for us and are very excited to have a platform for effectively all Brazilians and Mexicans and Colombians, where we are as well.
Right. David, your customer acquisition cost right now is quite low. $5 a customer, I think, by the latest numbers that I saw. Is that going to change over time? I mean, you're looking at a lot of customers who are just coming in organically, and that's great. But at some point, I imagine, as you grow, there will be an upper limit at which you're going to have to start to pay to try to bring more customers in.
Yeah, I think it's a couple of things are happening at the same time. On the one end, there might be a little bit more competition, but on the other end, there is just much more supply of customers. Customers are now seeing this as the real option for banking. And so all these trends are playing at the same time. Net for us, we have not seen any change at all in our CAC, even after getting to almost 48 million customers, which would put us at one of the largest financial institutions in Latin America in terms of number of customers. So it is possible that at some point that happens, but we're also adding more products, adding more verticals, and ultimately having a better value proposition.
You mentioned competition, and there are sort of two fronts coming at you. Others that are trying to effectively ape what you're doing, meaning digital-only banks that are trying to compete with you, and the traditional banks, the legacy players who are desperate to try to both keep their customers, if not grow.
Yeah, no, that's right. So on both ends, there's competition. Ultimately, though, most of the customers are still in the big banks, and they end up having most of the 80 to 90% of the concentration of the system. But listen, the market is so large, and there is so much opportunity to make it bigger, because still there's over 200 million people in Latin America that have no access to banking. They're still putting their cash inside their mattress. So ultimately, over the next 5-10 years, that market should expand significantly, and there is a lot of space for a lot of people to grow and take share, and ultimately make a much more interesting market for everybody.
The business, as we said, is growing like a weed, yet losses persist. $99 million loss for the first 9 months, ended through September. Speak to the path to profitability and what that looks like.
Sure. So we were actually profitable already in our core bank in Brazil. We started generating cash in 2018. So we're one of the few big startups that I know of that in year 4 they were cash flow positive and generating real profits in their core market. We obviously see a huge opportunity ahead over the next 10, 20 years, and we want to reinvest all those profits back into growth. So a lot of those profits and the capital we're raising in the IPO are going for new markets in Mexico and Colombia, where we will continue to prioritize growth. There is a lot of customers to serve, a lot of products to launch, and we ultimately think that we should continue to be focused on growth, obviously while looking at very disciplined investments across the entire company.
how much of the emergence of crypto do you think is driving your growth and the use case for your product?
Not much. We don't offer any crypto today. We have a couple of funds that have exposure to crypto, but crypto is still early in Latin America. So the story is a bit about disruption on the low end, is better products for the majority of people. And the infrastructure is traditionally, the legacy infrastructure is so expensive that there is a lot that you can do by removing all the branches and all the physical infrastructures and expanding access to financial services with no fees using the existing pipes of the financial ecosystem.